if I wanted to invest in crypto, what that process would look like, and then we can kind of dive into some of the other things associated with crypto.
Easiest way maybe to start is Coinbase, right? You go in the app, set that up pretty quickly, direct connect that to your bank account, ACH over a few $100s to get started to kind of play with. If you want to be sitting in crypto USDC, you could also sit in USDC. Now USDC is a stablecoin that's pegged 1-to-1 for the US dollar, right? And it allows you to move through the ecosystem on chain to participate in different DeFi protocols, etc.
What would examples of some of like maybe like a good business plan that you would say would be something that maybe you would believe in, and maybe like an example of a business plan that you're like, hey, look, this is gonna, maybe not that you don't believe in it, but just a little bit harder to execute, or maybe like some red flags of certain ones, and you don't have to mention any names.
And I've seen something where it's like pizza token. Okay, it's like, I forget the name of it, it's for a pizza token where they want to bring pizzas to like everybody. You know what I mean? Okay, so these are like things that these are things you should run.
Why are you running? Why are you running?
Hi, everybody. Jose Luis Morales here. Welcome back. Today we have Joe Robert, not Roberts, with Robert Ventures out of Raleigh, North Carolina. He is a repeat guest. In the past, he talked to us about some of the tax incentives about investing in Puerto Rico. Today, he's going to be explaining to us what is cryptocurrency. Now, just to be completely transparent, this is a topic that I have avoided for a really long time just because I don't know much about it. So I'm very interested in learning about it. So I wanted to bring Joe on the show to kind of just explain it to us. Welcome back to the show, Joe. How are you?
I'm doing good. And, I think we all survived, or at least most of on the East Coast survived from the storm rolling through. Hopefully the people in Florida are able to take care of what they need to take care of, but enjoying another sunny day now.
That's awesome, brother. Happy to hear that. Cool. So for our viewers that maybe didn't watch the previous episode, who is Joe Robert? And then how did you get involved in crypto currency as well, too?
Yeah. So, I'm 40 now, and I've been investing for 20 years, right? So at 19, I got my first property. And so mostly over the last 20 years, I've been investing in the mostly residential real estate area, along with the distressed mortgage market. And so to, keep this short for listeners, in 2014, we realized in the next few years, we were going to start making profits, right? And that's when we realized we were going to need to go to Puerto Rico. And, so we made that move to Puerto Rico just in time. And we were able to also acquire assets while in Puerto Rico. And now in regards to this show today, a lot of crypto people are moving to Puerto Rico, right? Because why? You can take advantage of the 0% tax rate on those capital gains from crypto. So especially all the young blood, running around being a degenerate gambler in crypto is a great place to go and hang out.
That's funny.
Right? So in 2017, there's some of the more early OGs, we'll call them, like showing up in Puerto Rico for the tax breaks before the whole crowd came. And, I was at a party and just met some of the people in the space. And that's kind of how we started getting involved. I kind of dismissed it first for a few months. And then, later on in the year, we started to dabble ourselves. And coming from the real estate space and seeing what's happening in the world on a daily basis, we're playing in our phones, we're on our laptops. Like, every company is now becoming a technology company, right? It's not like, you're just a landscaper, right? You're like, how can we create a technology company out of a landscaper, right? And so I have not paid as much attention to the tech side. And so now my goal and kind of what intrigued me about the space was this is kind of like the next evolution of the next steps, we're going to take from the technology side. And, they like to say, at the high level, Web 1 was basically like read, right? So you went on the internet, you read stuff, right? And then Web 2, which kind of what you guys are all used to participating in the last 10 years, is that it's like read and write, right? So you go on there, you read stuff, you absorb it. But you also can write on Facebook, post on Twitter, make blogs, post content to the internet. And when you post that content to these social platforms, they own all your data, right? And so there comes the concept behind what we're trying to achieve in Web 3, where really you have the ability to read, write, and then own all of your assets, right? Or at least, own, control, and be able to monetize more directly with your fans, your clients, your customer base. So let's pause there and, see what you have.
So I think it's important to kind of understand that, like, you're basically explaining that it's evolving, and this is just basically another evolution of the different webs that it's evolved. So I guess my question is, like, what is it? Like, is it used to buy stuff? Is it used just speculative, like, meaning like, hey, look, this is a place for me to hold my money? Is there good crypto? Are there bad crypto? Is it all considered the same? I've got so many questions. Like, how does it get valued? Like, how do we know if something's overvalued versus? I know. We'll stick with one at a time, but I just have so many questions about this. Like, so maybe just start.
Yeah, let's break down from where I left off. Like when I say Web3, I think, a lot of people also put the whole space as like just crypto, right? And it's kind of becoming a lot more than that. So everyone listening, you have NFTs, people have seen also, right? You have crypto, you have these networks that are being built. You still have SaaS like infrastructure companies being built. So investing in this space, you don't have to just be a crypto investor, right? You could also invest in equity in companies, NFTs, digital art, and different things. Now, like most things, if you look back in the internet 20 years ago, right? Or, when you're investing in venture capital, the similarities I like to say is that you don't have clarity about what something looks like in 5, 10, or 20 years. But when you look back, example here is if you take Amazon, you look back when Jeff Bezos started, a lot of investors and people passed on investing in that company. The vision he had then was not that it was this conglomerate, right? It's just going to be like this online book thing. So when you're investing in these early startups, I like to say in these early networks, what we're investing in today, I'm sure is not even going to, we'll have no clue what it actually is capable of doing in 20 years. But you're betting on the team, you're betting on the product that they're building, they're betting on the network and the users it will receive. Will it receive traction, right? If you don't believe in it, then you obviously don't want to invest in it. So there's different avenues to participate in investing in this space. Like I said, from the equity to the NFTs, to the crypto, to soon there'll be digital assets that represent securities, like real estate, etc. So when we're talking, around crypto and the blockchain, right? And back to the read, write, own, our thing is to bring the power back to the creators, to remove more rent-seeking middlemen, right? Make things more cost efficient, basically. And so what we're building is the ability to have distributed ledger technology where at the easiest core, basically like a centralized database, one person could go in and change the data at any point, right? Think about like the government voting, right? Like it's housed at somewhere where someone's counting some votes, right? It could be manipulated. When you have digital distributed ledger tech, that many people on the network actually own a copy of the network. That's why it's distributed, right? It's not just one location. And when it becomes distributed, then many participants on the network participate in validating those transactions. And therefore, that's what prevents fraud. And also then once it applies into a block on that chain, then it can't be undone. It's immutable. So let's bang any questions so far.
Well, the first question that I have is like, what does crypto replace, or what does it solve? And I think you kind of answered it. It's basically cutting out middle people and bringing transparency to the game. But as a follow-up question, like I hear, and this is just me kind of speaking without knowing very much, but I hear that people get their accounts hacked and people get crypto stolen from, but then it doesn't make sense. Like if it's 100% completely transparent, wouldn't we be able to find it again if somebody got hacked? Because I've heard things like that, and I'm just like, well, if it's supposed to be safer, like how are people's accounts getting hacked, and how are sometimes millions of dollars disappearing? So I guess that's the part that it makes sense how it's being more transparent, but then the other part doesn't make sense to me.
Okay, so typically how it works right now is, in order to participate in the crypto ecosystem, you need to have a fiat on-ramp or off-ramp. So exchanges like Coinbase, Kraken, Gemini, these are like the on-ramps where you bring your fiat US dollars and you exchange it for something within the crypto ecosystem. And when you do that, you typically have not typically, every time from a licensed company is you have to KYC. When you do KYC, that allows everyone to know that that's your accounts, right? So first of all, that's step one. Now, based on these hacks, when people hack and steal crypto in the ecosystem, they typically need to exit through these fiat off ramps, right? And this is where they typically get caught because you can't really leave or exchange it into any type of currency because almost all accounts are KYC'd. And so, yes, it is one of the most transparent ledgers that are available with a history on chain of where those tokens do go. And typically it's just a matter of the governments or the police actually catching up with what happened.
So basically you're saying that it is traceable, it's just not being followed through on in some cases. Basically, like if somebody's account got hacked, there just isn't proper investigations, but meaning that it can be sourced or it can be found basically if.
Correct. I mean, almost everything. I mean, there was some protocols like Tornado Cash that got shut down recently that kind of was in the news that can kind of mix the assets and kind of have it come out the other side and make transactions disappear a little bit. But that's kind of gone down. So it's becoming less available to have that type of fraud within the ecosystem. It's kind of like if you lost $1,000, $2,000, right? What are you going to do? I mean, is the police going to go get involved in that? And that's probably what you're probably alluding to, right? If people lose a small amount, it's going to take time. There's sources out there that you can hire on-chain firms that do they find all the on-chain activity and where the crypto goes, and then they work with all the exchanges and try to blacklist those wallet addresses so they can't come back off into some type of currency in the future date.
That's crazy. And then in those instances where that does happen, how does that work? Like, let's say because I've heard like people stealing certain crypto from other people or somebody's account got hacked. Like, how does that even work?
So typically it's mostly phishing events, call it, like just like it sounds like, right? Where attackers are phishing with an email, an attachment, something to open. It's usually unsophisticated people that come in the space that give out what's known as their passphrase, right? Or their seed. You're never supposed to give it out, right? It's almost like saying, here's my social security number, go run my credit. You know what I mean? So they take that, then they could go into your wallet and then drain it. Most of the time, the hacks and everything stem from some type of human error. That's usually, unfortunately, that's where it always comes from, right? And so I think the people that want to come participate need the proper education and, best protocol. One, don't post pictures of their accounts and how much they have on the internet, right? I mean, that's why a lot of people get hacked. I mean, don't fall for any PDFs to click. Don't fall for any scams. Don't give any passwords. Don't give any passphrases. These are typical ways that most people will get scammed.
All right. So let's say I wanted to invest in crypto. I know that you said that I would need to find a fiat and then from there I can invest. Can you kind of walk me through the process? Like if I wanted to invest in crypto, what that process would look like? And then we can kind of dive into some of the other things associated with crypto.
Yeah. So easiest way maybe to start is Coinbase, right? You could go in the app, set that up pretty quickly, direct connect that to your bank account, ACH over, a few $100s to get started to kind of play with, get an idea of how that process works. Once you do that, that money gets sent into Coinbase. Now you have the options to really make your first purchase. If you want to be sitting in crypto USDC, you could also sit in USDC. Now USDC is a stable coin that's pegged 1-to-1 for the US dollar, right? And allows you to move through the ecosystem on chain to participate in different DeFi protocols, etc. So basically your USDC is your digital form of the US dollar on chain. And after you now on the exchange, now you have the opportunity to buy different crypto. And let's say you want to buy some Ethereum, and then you can move that from that wallet to what's pretty much known as a Web3 wallet, right? Where now you're participating in the ecosystem and you can interact with these different protocols or applications. So say you want to maybe go to a derivatives platform and you want to bet on, a margin or something that Ethereum is going to go up, in value. So you place a 2-3x bet or, margin on your account, you participate right there. Maybe you want to be a lender on a platform. And so you could deposit your crypto and get maybe 1, 2, 3, 4, 5, up to 15% return, depending on the platform, where that's fully collateralized most of the time, and you can get interest in that fashion.
Okay, so there's different ways of investing. What are the different ways of investing? And it sounds like one of them is just to pick a coin that you want to work with. The other one is you can be a lender for other accounts. What are the pros and cons of either one?
Well, so when I say like a lender, I guess you're borrowing, you're supplying your assets in exchange for yield, right? And when in the DeFi ecosystem, there's like Aave protocol, right? So maybe you have Ethereum, so you can lend Ethereum to Aave, and then there's a borrower on the other side that puts up collateral and borrows that, and maybe they get, you get paid 1, 2, 3% a year on your assets.
Why would they want to borrow like Ethereum? Like what would be the benefit to them of borrowing it? And sorry for like the questions, because I just don't.
So maybe they don't want to get out of another specific asset, right?
Okay.
Maybe I'll make this more like, so say you got Apple stock, right?
Mhm.
But you don't want to sell it for taxable event or something, right?
Yeah.
So you put that up as collateral, and you're like, you know what? I want to borrow Tesla stock because I think it's going to go up in the next 3 months, right?
Mm-hmm. Yeah.
You place Apple stock up as collateral, and then you borrow Tesla stock, and you pay 3%.
So you borrow the Apple stock to.
Yeah, you put Apple up for collateral, borrow Tesla stock. Does that make sense?
Yeah. Okay. That makes sense. All right.
So
Cool.
if you don't pay that Tesla stock back, you would lose your Apple stock.
Basically, it's almost like using one of your properties as collateral for another property, basically, as it
Correct.
relates to real estate.
So you put your property up, you get a line of credit, and then you go and buy another property.
If you don't,
right?
if you don't pay that mortgage, then obviously you lose that one. Okay, good. So let's say that I find the fiat. At that point, like, how do I determine like which cryptocurrencies to invest in? How many cryptocurrencies are there? And what makes them valuable? In other words, like, why would I want to invest in crypto?
There's thousands of tokens out there. It can get overwhelming. It's best to start to narrow in on a certain sector or area that you think is going to perform well based on the next few years, right? So a lot of people right now are looking at the layer 1 protocols because it's the base layer, settlement layer, in which a lot of applications will be built. So ultimately, there's a belief that you need that done first before all the applications can occur. And so a lot of investments going into layer 1s, right? And then how do you figure out which one's going to succeed? You don't. No. One great thing that a lot of people like to look at is the developer activity, okay? And that sometimes could be a chart, a lead of where the capital is going to flow to, right? Because let's say Ethereum, a lot of developers are moving to Ethereum. Well, that means one, there's going to be a lot more activity, a lot more development, and there's going to be a lot more resources and capital being put on that chain. Now, the same goes to, let's say, Avalanche, right? How many developers are on that chain? And then over a period of time, some people like to look at how many developers are coming and going from projects, and then compare projects side by side. That's one aspect. The more developers, the more that ecosystem might perform better. Next, you may want to look at just users, wallet activity, active wallet activity, right? How many wallets are being used on that blockchain, right? Are they increasing on a daily, weekly, monthly basis? Are they decreasing? Another great point to look at, right? This is, I don't want to say similar, but it's, if we look back at like Amazon, Facebook, these are networks in the sense that the more people that join them, the more valuable they go.
Yeah.
Right. I mean, it's like Microsoft, all of them. It's a matter of, because they have the world's user base. And so the more users that come, typically that's Metcalfe's law, the more exponential that value of that network goes. So if you think about that, then when you're doing your due diligence, you want to think, like I said, where the developer's going, how many users are going, how many users can it attract, how many can sustain, how many transactions can it do per second.
And then how would I go about doing this research? Is this like through Coinbase that they just make it public, or is this something that is some sort of third-party website that kind of tells you on a day-to-day basis? And how often is this updated as well too?
So CoinGecko.com, CoinMarketCap.com, two great sites people have used over the last 5 years or so. CoinGecko more recently, last couple of years, it's really taken off. That's one spot to start with. You could do some preliminary research there. They have filters to be able to filter different categories, like I said, and look at different assets, their market cap. Usually, all projects have a website, and on their website, you can locate the white paper. And the white paper, I like to say, is essentially their business plan, right? With what they're trying to achieve, what they're doing on the roadmap, and that you should digest and be able to understand what they're doing, right? Because you want to invest in something that you believe that can be executed and that you believe will ultimately, be successful and have a lot of users. So the white paper is very important to read. And I would say, wow, there's so many different sites out now that you can subscribe to that are SaaS-like products with monthly subscriptions.
What is a SaaS-like product? What does that mean?
Well, I guess there's a lot of subscription services out there providing data. How about that?
Okay, perfect.
So Glassnode is another great one people use. We have a subscription there. That's a lot of on-chain data, so you get an idea what's happening on chain, how many transactions are occurring. There's some that have token metrics is another one that's analyzing projects. There's kind of a handful. I could always provide them if you want a list for resources.
I think that's awesome. Cool. So it's basically almost like looking at, is it almost like the stock market in a sense where you have this company, you look at the business plan to see if they can execute that business plan. Then you look at the people who are behind it, like who is the CEO, who is the CFO, who's this person, what's their track record? Are they known for pumping and dumping? And then getting behind those sorts of things. At least that's what it's kind of sounding to me a little bit like it is.
I say that's a great example. That's what I like to say. So the similarities are, we'll call it like blue chips, right? Like Ethereum, Bitcoin, large caps like Solana, Matic, Near, and then you have mid caps, small caps. And I like to say a lot of the tokens are like pink sheets. There's pumping and dumping.
Yeah, basically.
You know what I mean? So it's very similar, and there's a lot of like the stock market. There is a lot of different categories that are showing up now, right? I mean, you have borrowing, lending markets. You have storage for decentralized storage. You have a lot of derivative products to be able to trade options and so forth. You have the whole gaming, the whole metaverse. I mean, almost all these different areas are being kind of duplicated here in Web3 to attack.
What would examples of some of like maybe like a good business plan that you would say would be something that maybe you would believe in, and maybe like an example of a business plan that you're like, hey, look, this is going to, maybe not that you don't believe in it, but just a little bit harder to execute, or maybe like some red flags of certain ones. And you don't have to mention any names, but just maybe more in depth as to what to look out for, basically, in those sorts of things from a newbie perspective.
Yeah, let me see what comes to mind. So typically, when you go to conferences and you're later in the cycle, like maybe a year or so ago, some things I would watch out for is when everybody takes anything and tries to create it to offer a token. And, I've seen something where it's like pizza token. Okay. It's like, I forget the name of it. It was for a pizza token where they want to bring pizzas to like everybody, you know what I mean? Okay. So these are like things that these are things you should run.
Why are you running? Why are you running?
And not, run away from. I like to say is if you can't kind of relate to it or understand of how that would be used, then you probably shouldn't be investing in it, right? And so if you have like an options product or, an options application, right? You want to trade options or you want to margin leverage your position, right? I mean, that's standard across most investment platforms. So that's something that sounds reasonable, something that people would actually use. It comes back to the pizza token. Like that's just, it's not something you would use. So I wouldn't invest in things that are some common sense. Over the years, we've just seen so many. We've seen so many. Some people, come out with tokenomics that are not sustainable, right? So when you look at the project and you look at the tokenomics, something that literally is just printing the token to get back out to other people is probably not sustainable. That's something to be looking for. Does that make sense?
Yeah, that does. Cool. What about, you said that there was certain developer activity? Like, what are some examples of some developers that that join a certain token, just to kind of get a little bit more clarity on that?
Yeah. So we're looking at the like developer count. How many developers are actually going to a project and what type of commits to GitHub is
Hmm.
occurring. And so Electric Capital, Electric Capital puts out an annual report, that's pretty close to what's happening, that shows the different developer activity across the different protocols and how that's increasing or decreasing over time.
Hmm.
And that hopefully will give some insights into, what's being favored amongst the community.
In terms of that. Okay, good. And then, if I wanted to invest, what is the process like of placing in order? Is it just very similar to stocks in that sense, where except without the transferring into the exchange, or how does that work?
Yeah, I mean, simple.
Basically.
You can do a market order, right? Where you
Hmm.
just push and put in the amount you want to purchase, or you could do your limit orders and put in that price point you want to hit. If it hits, it'll do the purchase.
Yeah. What do you see right now? Some of the challenges that crypto is experiencing, and then what do you see like the future of crypto as well, too, just from your perspective?
So challenges. Man, you got some good questions today, dude. You're challenging me.
Hmm.
Just did a panel last weekend or so for some IRA custodians, and we were a little easier on these questions. So some challenges that I see. Um, and this is just my take. I think a lot of times the projects, there's different opinions here on launching the token early, or maybe launching it later. I think a lot of projects should try to solidify their product and market fit and get users before launching the token, right? Now,
Hmm.
sometimes people like to say, well, the token's also an incentive mechanism to help go from 0 to 1 and get the cold start and bring users in, right? But
Hmm.
ultimately, what happens is they're launched and the users that join are not necessarily there for using the product. They're only there to kind of speculate on the token.
Yeah.
And so it kind of goes up, it does its run, and now at the same time that the token starts coming back down, and now that team needed to manage everybody, emotions and Discord, etc., around what happened with the token. It's going down in value. I think it brings, brings distraction to the people that are trying to do the development and work on the project, having the token. Now, the other aspect is kind of the cold start. There is benefits there to help bring people in and then
Hmm.
see who sticks. So I think that's kind of one challenge there, that a lot of the tokens have not figured out a way to really accrue value back to the token holders. And therefore, we don't really know how to exactly measure the value. And that's why we have that way up and then way down. And so I think for a while, that may still be another challenge. That's going to be a challenge to the space.
Hmm.
I mean, we need something that more projects that accrue value back to the token holders through yield through transactions.
Okay. Almost like some sort of cash flow or residual,
Yes.
or yeah, almost like dividends in stock, basically.
Correct. So some projects, let's say, you're doing a transaction and maybe 30% of that transaction fee would accrue back to those token holders.
Okay. Where it's like a dividend, basically, and now there's something that you can use to kind of base. Is there a place where you can see how, like, not only the number of transactions, but the number of like revenue or profits that the company is bringing in? Because
Yeah.
I know for like publicly traded companies, you can kind of see that. Is it the same level of transparency for crypto, or no?
Yeah, I mean, because most of it's on chain. So like a company like Token Terminal, they provide a monthly subscription to with a lot of this data that kind of analyzes the revenue that's projected revenue that's happening and occurring with the different protocols. Also, from an open source standpoint, doing analytics, they're open source, so you could search their dashboards for all those that are contributing on the free account. The dashboards are open source, so you go in there, pick a certain project, and then look, see if anyone's already done the work to
Mhm.
aggregate that data.
And then I know that you said that sometimes you have people like not really utilizing the product and just kind of almost like speculating a little bit. Like in my head, I'm thinking like how many products is there, and what are some examples of some of these products? And like because I keep hearing the term utility as well too. I don't know if that's the same thing as product, or
Okay, so I think when we're saying utility is that we're bringing utility is that you're utilizing that token within that ecosystem, right? You're using it through, maybe a governance and voting mechanism.
Mhm.
You're using it as a staking mechanism. Within maybe that staking, you're receiving those cash flows. And, let's go back into that question again.
It was just like what are some examples of different products? Like, do all coins basically produce income? Because my knowledge of it was that some of them is it's almost like just speculative, like almost like, hey, look, this is going to replace this product or that product. And I guess that's the part that I do all coins solve a different problem? Do all coins solve the same problem? Um, do all coins make money? Do some coins not make money? Like, and when I say make money, it's almost like if I sell sodas, I'm in the business of selling sodas, and that produces a certain revenue. Obviously, my stock can go up and go down, but it's on paper. It's not really like any it's not any dividends or cash flow in that case.
This is like venture capital, right? So you have to expect a lot of projects will not work out. They will not work out, right? So don't, you sometimes people are like, oh, 99% of projects are going to go to zero. Well, I don't think probably 99, but in venture, a lot of small businesses, startups do fail, and that is typical, right? So when you think about that, you should be allocating appropriately, especially if you're allocating to smaller market cap projects, because there's likely that they will go out of business. Are all the tokens There's certain projects that do allocate those cash flows back to the token holders, right? And you have to kind of be in the space and do your research and due diligence and use some of these research websites to find out who that is, and that'll give you the insights there. There's a lot of them where maybe in the last cycle, we'll call it the last couple of years, they launched what's known as like a governance token to give you voting rights, which is very limited into what you could do with it as a way to label it as a thing that was kind of needed, but probably has no value. So, at the end of the day, that's what comes back to that due diligence. You have to kind of say, does this project need to be decentralized? Does this project need a token? And these are some of the things you'll want to answer when doing your research.
So can you give me an example of something that maybe needed to be decentralized, and if a token is needed, just to kind of understand it a little bit further?
Let's take Uniswap, a decentralized exchange, right? And so you have token holders, and those token holders can receive cash flows from all the transactions. In that case, you would have a token. Initially launched with as a governance token, but they're moving recently to vote on to share cash flows with that. Another project, GMX derivatives, trading. I think 30% go back to token holders.
And then what can I buy with cryptocurrency? Like, can I buy anything that I would normally be able to buy? And I guess what makes it different than just giving them $1 versus crypto, like the fact that the crypto can go up over time, or
Oh man, these are a lot of questions, right? So let's go spending, right? Spending. In the U.S., our system works pretty well, right? So you might not see all the benefits here as easily as you may if you're living in Africa or another country where you don't have the same accessibility to the financial infrastructure. But so example is this: I got a guy who's on my team, works in Brazil, right? You want to send him a weekly paycheck or a weekly money, whatever. You're either going to go through a bank wire, which is days and has a good bit of fees and it's days. You can go through PayPal, which is quick, but they take 1 to 5% on the arbitrage between the currency spread and the fees to go overseas. Western Union takes fees. So typically you're always at like a 1 to 5%, and you're going through an intermediary. Right? Now, what if that intermediary says, guess what? I don't like this guy down there. For some reason, he posted a picture online, and I don't like his picture, and I'm not going to allow this transaction to go through, right? That's the difference. So now with crypto and blockchain as being decentralized, if I want to send money to that person, I can send money to that person. There's not a third party centralized service that says you're banned, you're stopped, and you can send that money. I could send that instantly.
Would it be safe to say that crypto doesn't have a middle person, but what is it, Coinbase wouldn't be like a middle person essentially? Or like if I wanted to send some money to somebody else in a different country, would there be any fees to do that? Or there would still be fees. It would just be a matter that you can't like ban somebody basically from receiving money?
Yeah,
Or
correct. So Coinbase is a middleman, we'll call them, right? Because they're the fiat on ramp and off ramp.
Mhm.
So that's where they can block you because they do KYC. The IRS, the government can go in there and say what they want to say. But now,
Mhm.
once you move, let's say, into Bitcoin, out of Coinbase into Bitcoin, now you can send it to anywhere across the world. That makes
That makes
sense?
sense. Yeah.
That's why, like, when you hear crypto native or stay in crypto, is because people don't want to ever leave crypto and go back through those
Coinbase or anything
intermediaries.
like that.
Yes, because now, like, not say that most people do this, but now that Coinbase can easily, or IRS says Coinbase, give us all your records. We want to audit all the people for taxes, right? Coinbase, give us who's doing more than $10,000. We want to know their information, right? They have the powers to kind of be able to do that.
But once you're in crypto, they don't have the power to do that. So unless you share your wallet, nobody can really know how much you own in crypto. Is that?
Well, the on-chain activity will be able to kind of trace it back to Coinbase. Remember what I said? They can kind of
Yeah.
trace it and traceable there. So Coinbase kind of knows. But once you're out of there, yes, when you're into Bitcoin, you're in your own wallet,
It can
non-confiscatable.
be.
That's why you're going to hear that non-confiscatable asset, right? So if you want to roll from here in the U.S. over to another country, anywhere, as long as you know your passphrase, you can access your crypto.
Yeah, that's crazy. And then what are some of the things that you have to set up? So who gives you the passphrase and how do you get, and where do you plug that in once you have the passphrase?
Yeah, so most people use what's known as like a ledger. It's a
Uh-huh.
third-party wallet, hardware wallet. And so when you set that up, obviously it has all the directions, and then they give you the passphrase
Mhm.
when you're setting that up. And usually people will write this down on a piece of paper. They'll carve it into some steel and hide it. They'll put it in a bank vault. Depends on how secure you want to be. Maybe you'll shard those keys, and what that means is maybe you'll take half of them, put them in one location, put the other half in another location in case
Mhm.
something happens, you know? And once you have that set up with your ledger, now you have the ability to access your wallets, but then you have the backup private keys for that ledger device.
That's awesome. And then what makes, I know that in real estate it's supply and demand. I'm imagining it's the same thing for crypto. Like what makes like crypto prices go up and crypto prices go down? And then also what makes a company like go at it, like what makes a crypto company go out of business? Because I've heard that some coins have gone, or most of the coins are going to go to shit, basically, in other words. Like what would make a coin go to complete shit?
Well, all right, let's take this back to startup land, right? Or anything, right? Well, what happens when something doesn't survive? Usually it means it hasn't gotten users. No one's adopting it. There's no real product. There's no usable product. I mean, people sometimes go out and build things and really there's no need for the product, right? So that's why things would
That's
go out
really
of
what
business.
it is.
Yeah,
So that's really the foundation, finding coins that have a product that are usable. And as long as you can find those coins, those are the coins that are going to survive. So like, for example, and I don't know if this is accurate, but for like the NFTs, they're linked to, what are they linked to? The NFTs, they're linked
JPEG, like a
to
JPEG.
JPEG, but is it Ethereum or whenever you buy NFTs, or can it be any of the coins that you buy?
It could be any of it could be multiple blockchains. Most of the NFTs have been sold on Ethereum blockchain,
Ethereum,
right?
that's kind of what I thought. So
Yes.
would that mean that because most of them are sold on Ethereum, that brings in more users, therefore making it, as long as NFTs continue to do well, Ethereum would have more transactions, hence making that coin more valuable over time.
Correct, because if you interact with Ethereum in your wallet to purchase these NFTs, typically everyone's going to hold some percentage of Ethereum in their wallet, right? It's kind of like, I don't know, like gas in the car, right? Like everyone's got some gas in the car, you know what I mean? So
Mhm.
ultimately, it's like a supply and demand. So same also with Solana, a lot of Solana NFTs, right? Same thing there. It's supply and demand. The more transactions that occur, more users come to that network. But then that also comes back to the tokenomics, right? So now you're like, I underwrite the project. It's got users. I see the applications, they're growing, everything. Also, what does the tokenomics look like? What's the value? How does the value accrue back to that token holder?
And then it sounds like some of them actually do give dividends or some sort of cash flow
Yeah.
with the project, basically, and some of them don't, just depending on what product they actually do. Okay, good. And then this is kind of one thing that, and this was like, and I want to ask you this, but whenever I would ask this to people, I'm like, okay, like whenever I'm thinking of a business plan, I think about like, who is my competition for that business plan? Like if I'm starting up an e-commerce store, like let's say in the Western wear industry, I'm like looking, okay, the Boot Barn. I'm looking at just different stores that could be my competition. So would it be safe to say that the competition for crypto is other currencies, like other countries' currencies, like maybe like the US dollar? Or are they just completely different classes? And then how, I mean, I know that if I was starting up a business plan, the last person I'd probably want to compete with would be the US government, because they're so mighty and powerful and can destroy like virtually a lot of things. Is the US government like competition to crypto? And do you ever see them coming up with like some sort of regulation to almost like kill crypto, or even kill most of the cryptos and just have their own digital currency?
Well, I think obviously the U.S. and most governments will not want to see other decentralized type currencies outdo their currency. So I'm sure they're going to be on top of that. I think there's a world where Bitcoin and maybe some others, along with central bank digital currencies, could survive together. And there's room for that, I believe. I don't think one will replace the other, at least anytime in the next 10 to 20 years.
Okay.
Maybe further out. You know what I mean? If we have more problems in the world, then that's a possibility.
Okay. So basically they can potentially work together. Do you ever see like the US government coming up? I've heard that they're already coming up with like a digital currency themselves, or that's kind of the future. I don't know how true that is because I'm obviously not involved in that field, but do you ever see something like that happening at all?
The U.S. has, I think, like pretty much been back and forth. Some places are already doing it. I think even like the Bahamas was early to the game. I think they have one down there. I think the U.S. is like a little bit slow sometimes. I think they're kind of waiting to see what's happening and allow some other people to kind of trial it before they do it and execute. And I think they want to, if they do anything, they want to try to get it right. So they kind of want to watch what happens for a little while.
Because I think like where I kind of see, or I kind of have thought, I was like, well, digital currency would be good in a sense where the government would have more control over a lot of things. Like sometimes when, like if I give you $1,000 in cash, there's no way to ever track it because I literally handed you cash. But where I kind of see it a little bit is, or the reason that why they'd want to get involved is because they can virtually track everything. And it's almost like this went to this, that went to that, which I could see that happening. I just didn't understand if they would just adopt one of the currencies, create their own currency, and what would happen to all the other currencies, which I think that you mentioned earlier that there's a good chance that most of the coins would not survive, and it would be a very small percentage of the coins that have utility that could potentially.
Yeah, and I think there's also, to clarify here, there's different tokens for different use cases. And a lot of the tokens are probably not in the use case camp of transfer of value for like monetary type payments. So
What does that mean?
Well, I think like, Bitcoin, USDC, maybe Ethereum, I think those type of tokens could be used for payments, right?
Mm-hmm.
Or exchange of value, but a lot of the other tokens won't. Meaning there's not thousands of tokens, I think, that are going to be used to be sending borderless payments.
What would most of the other coins be used for then, if they're not used for
within their own network? So they're going to be used within their own network or their application. As like I said, royalty, tokenization of assets, cash flow to token holders, rewards, incentives.
Anything else? Or I guess here's my question: what do you see as the future of crypto?
I see. This is a tough one, huh? Like I said, it's hard to see out very far. I think there's going to be one or two dominant stable coins that I think, is probably like the best use right now for payments and settlement. I mean, when it comes to these stable coins, I think that's going to roll out in the next few years. I think that'll become more widely adopted. I'm already seeing some companies implement stable coins into their offerings, their software, etc., where people will have the ability to be able to pay with them. I think also, Bitcoin will garner more adoption as we see some of these world currencies, sink over the next few more years, as we're already seeing. And I think the certain tokens projects looking 5 to 10 years out will, I don't want to say look similar to the stock market, but it'll be like another investment sector in which a lot of people are participating in.
And then why would Bitcoin be the coin that potentially other people adopt? Is it just because it was first in the marketplace, or is it because it's got some sort of product or just utility that's
like the most fully decentralized token out there, network, right? So you want to guarantee that no one could take your assets there. That's where you're parking your capital.
why would that be the most can't somebody else just replicate that, like where nobody else can take your asset? Or is the technology behind it like the just so far more advanced than anything else that nobody has even can't come close to replicating it?
I think you have what's called a network effect and a brand and a trust. And I think that's the thing. A lot of the projects are open source code, meaning you can fork it, take the code, build your own, but it doesn't mean you have any network, right? I mean, you can fork Facebook, but it doesn't, you know what I mean? What are you going to do?
Yeah. With no users,
basically.
basically.
You need people, right?
So they have the users, basically, in other words.
Yes.
That makes sense.
I mean, they have 10 years, right? Or over 10 years. So
they have market share as well too, and trust, basically, that they're literally very unlikely that they're going to go anywhere, basically, versus somebody else with a. I think it was a good way that you explained it, almost like venture capitalists as well too, because the reality is that, like, in venture capitalists, you can make $1 billion company, but then you could also lose 100,000, $1 million, $2 million, 30 times, but you're really banking on that. A couple of really big ones that offset all the little ones, knowing that some of the ideas will never make it to end and some of the ideas will never come to fruition, but you're basically diversifying a little bit as well.
Yeah, correct. So for everyone listening, right, you never want to be married to a position. You never want to only have one position, right?
Yeah.
The market can change, and unless you're just magic and you got that crystal ball, you don't know what the future holds and what's going to be what's going to outperform in 5 or 10 years.
Anything else, Joe, that you think would be of value? And then lastly, where could people find you? And then lastly, my most sincere apology for all the rookie questions on this. This is just something that I'd love to understand more. I'm very, very new into this space.
Well, I think like all investments, choosing a strategy to go into the game, whether you're going to do it yourself, work with 1 to 3% of your portfolio, or you're going to use your retirement accounts, it is real money at stake, and you need to do a lot of due diligence and research into what you're doing. And, you're going to make a lot of the mistakes in the first 6 to 12 months. So use play money to kind of play around in the networks before, you dive in and spend more of your investment dollars. There's also a lot of different companies, obviously, that are in the space that have full-time teams. You may choose to invest with them. And I hope you're just as bullish as I am on where technology is going next 10 years. I think it's going to, as software is going to keep eating the world.
That's awesome. Glad to hear that. Cool. And then where could people find you if they liked your information and they wanted to maybe get in contact with you, or would like to collaborate in one way or another?
Yeah, so I got a weekly digital asset newsletter. We hit on an article, on-chain activity, and a podcast usually we highlight. It's free. Join joerobert.com and subscribe there. Anybody who would like to also looking to invest, you can book a call with me at robertventures.com if you're accredited. Otherwise, you could also find me across the social channels. Drop me a message there.
Awesome, brother. Cool, man. Well, it was great chatting with you again. For all of our viewers, we had Joe Robert Ventures, Raleigh, North Carolina. He had a previous episode with us about some of the tax incentives about investing in Puerto Rico. Joe, you have a really, I don't know if anybody has ever told you this, but you have a way of breaking down subjects in a very simple manner. So I like talking to you because I feel like you break things down like simply, and also like obviously you know your craft very well. So want to thank you for coming on the show, and to all of our viewers, if you've enjoyed the episode, make sure to hit that subscribe button. If you feel that this episode would be valuable to anybody else, make sure to hit that share button. And thanks again, Joe. Appreciate you, man.